Hello, welcome to the European Open briefing for Monday, May the 29th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So we're seeing a bit of a rebound in the US dollar. That was mainly on Friday when we had an upward revision to the US GDP growth for the first quarter, and it's hang on to those levels today following some comments by San Francisco Fed President John Williams, who reinforced the expectations that we'll likely get a rate hike by the Fed in June. We had another missile test by North Korea earlier today, but this was shrugged off by the markets. Asian markets, Asian stocks opened higher. But there is still some risk aversion ongoing in the markets due to those political concerns in the US. The pound, which fell sharply on Friday, has rebounded a little bit. It's back above the 1.28 level. We had more polls over the weekend that showed conservatives are down in the polls, but not as much as the one that had come out early on Friday. So there was a little bit of relief there, but the Australian dollar is still struggling near 1 week lows due to weak commodity prices, and one of which of those is oil. On last week, on Thursday, early on Friday, we saw a sharp sell-off in oil prices, but then we did see a bit of a rebound, although those gains were capped by the latest oil rig count in the US, which continued to rise. But let's begin with the dollar yen. Here we can see the dollar was on a downtrend prior to the GDP data. We saw GDP growth in the US, the annualized rate, being revised up from 0.7 to 1.2% for the first quarter. That was above expectations of an upward revision to 0.9%. We also had durable goods orders data as well, though those were also above expectations. And earlier today, we had San Francisco Fed President John Williams speaking. He said that the medium-term inflation trends are favorable despite some recent softness in inflation data. And we can see the dollar yen, it's currently around 111.25, and the dollar index is also holding near 1 week highs. Moving on to gold, we can see although gold has come off Friday's 4 week highs, it's holding very much close to those levels, around $1,267 an ounce. We did have another missile test from North Korea earlier today, but that didn't really have much of an impact on risk sentiment in Asia and also at the European Open. The political worries in the US are the main factor that's keeping that safe haven demand going. Of course, we have two investigations in the US on the possible collusion by Trump's election campaign team with Russian officials. And we also had the G7 summit on Friday and Saturday, where although they did appear to narrow their differences over trade policy, the big differences on climate change appear to cause some rift between the European Union and the US. So all of that is supporting gold at that 4 week high that we had last week. Moving on to the pound, because the pound was one of the worst performers on Friday after a poll showed the Tories' lead over Labour was just 5 points. We had more polls over the weekend where the gap although was narrowing, it wasn't quite as small as 5 points. Some polls showed that the Conservatives still have a more than 10-point lead over Labour. So that's why we saw that drop in the pound last week to 5 week low 1.2775. It's currently rebounded to around $1.2830 an ounce. And just a reminder that we've got less than 2 weeks to go now till the June 8th general election in the UK. Let's have a look at the Australian dollar now, because the drop in commodity prices continues to be a problem for the Aussie, mainly iron ore prices. Iron ore is, of course, one of Australia's main exports, and last week iron ore prices crashed to 7-month lows. This is due to concerns about a slowdown in China, as well as stockpiles in China being at record levels, and some recent data as well, mainly on construction data out of Australia, has pointed to that first quarter growth in Australia may be rather weak, perhaps even negative. So we're seeing the Aussie down over 1% from last week's 3-week high of 0.7517. Currently, it's trading at 0.7430 against the US dollar. Oil prices, here in the chart we can see that big sell-off last week. We see there was an impressive rally. They rebounded from Friday's lows by 4%, but then we can see prices kind of steadied just at the $50 a barrel level for US crude, and this is because on Friday we did have the oil rig count in the US, which showed number of active rigs rose again to 722. That's a 3-year high, and again it adds to the worries that despite OPEC's efforts, rising production elsewhere is going to counter any impact that the output deal will have. And of course we did OPEC and non-OPEC countries such as Russia did agree to extend the output deal by 9 months last week, but there was disappointment that it wasn't they didn't agree to a deeper cuts or a longer duration, hence we saw that big sell-off last week in crude oil. Looking at today's economic calendar, we can see it's going to be a very quiet day. We actually don't have any major data out today. So here I added the data for Friday for US GDP and durable goods, which we can see were better than expected. US and UK and Chinese markets are closed today for a public holiday. China is also closed tomorrow as well. So we might see some headlines from ECB President Mario Draghi's testimony before the Economic and Monetary Affairs Committee at the European Parliament at 13 hours GMT in the European session, although Draghi is unlikely to say anything different from his recent speech. And also just a reminder that the main focus this week will be on non-farm payrolls out of the US on Friday. That's it from me. Thank you very much for watching and have a great day.